For those of you guys who like trading the indices, we have some interesting news as earnings season is right upon us. The S&P 500 gains as key earnings from Johnson & Johnson, Bank of America, top estimates. So we had some earnings so far come out in the US that are actually looking pretty good. And this has a lot to say for the indices traders out there, but also other traders outside of just people who trade stocks or indices. I'm going to get into all of that here today as we get started. Bank of America had better than expected numbers. We also saw Johnson & Johnson, and we had a little bit of drag from Goldman Sachs, which came out lighter than expected. So yeah, a little bit of an interesting start for those of you guys who are watching the earnings season. Here is a look at the S&P 500, which has been on a really strong move to the upside recently, giving back some of those gains as the market opens today at the time of filming this video. So what's my take on it? What am I looking at here right now? Well, you guys know I am currently already long gold. I am currently about flat on my trade here. In fact, I'll pull this trade up on my actual brokerage so that you can see it. So if I go to GLD, this is where I am currently long. You can see my trade is just a little in the red at minus $58, $59 at the time of recording this video. So let's go over this gold idea. Why am I long, and is it still a valid idea? Part of the reason I'm long is because, again, I think that with some of the recent numbers that we had, CPI, PPI, from last week, these numbers came out relatively cool compared to what the market was expecting. It caused a big launch to the upside on gold, and then we retreated off of some more hawkish Federal Reserve comments that came towards the end of last week, and seems to still have a bit of drag on the gold market going into this week. Despite that, though, I think that we still have plenty of opportunity to the upside on the gold market. My personal opinion is that I think we probably head back to the previous highs. Now I've got it marked in the pink zone here. This is our all-time high on gold, which we tapped just shy of that during the invasion of Ukraine by Russia a little over a year ago now. And I think that we have potential to head back to those highs. Gold is one of those things. Over the long term, it tends to go up because they print more dollars, but they don't make any more gold, right? So that's part of the reason why I am bullish on gold in the long term, but also in the short term, I think that there are some contributing factors. So I've got this position long. Part of the reason, we'll go over this together from the institutional data updates that we did yesterday. We'll come back to that and talk a little bit about this gold positioning. So this is a look at institutional money right now, which is heavily positioned to the long side on things like gold. Also notably, for those of you who want to pause the video, you can. We also have things like the euro, the dollar, the oil market. These things are generally more bullish, whereas then you have the Japanese yen, the Canadian dollar, the Swiss franc on the more weak end of the spectrum in terms of what institutions are selling or even shorting. So when looking at the gold market, again, we have a lot of bias to the upside from institutional money. We also have a nice upward trend, I think, in terms of a price action standpoint. You've had a nice series of higher lows and higher highs in this chart, and I think that this has a pretty good potential to be the lower limits of this range that we've been trading in. So I'm betting long on it. My stop loss is in place. If we take out the previous lows, I will be out of this trade. So full transparency, this will be my point to say, hey, I was wrong, and get out of the way of a potential bigger sell-off. So again, whenever I take trades, I'm not 100% confident in any trade that I take. I'm always cautious, right? Because I think that that's what pays in the markets, is to be conservative and cautious and risk adverse rather than sort of firing, all in shots all the time, right? So we take small trades and we manage risk accordingly. That is the name of the game. Anyways, I do like gold long. If we take a look at the EdgeFinder's bias for gold, I'll pull this chart up here for a second. We can take a look at the gold specific chart and see what is contributing here. You can see we've fallen back into neutral for the gold specific chart. Part of the reason here is the retail sentiment tab specifically is giving us a no bias score. The reason for that is if we go look, it's very close to giving us a score here of +1, which would put us in buy territory. It was at the time of when I bought it. So here is the thing, 58% short, 42% long. What are we looking at here? This is retail positioning. This is what retail traders are betting on in terms of markets. When we look at gold, we have a preference to the short side from retail traders. At one point, this was much stronger, like 65, 70% short ratio. Now we've dropped down to 58% as the market has come down a little bit. Generally speaking, retail traders are contrarian in their view of the market. So if the gold market is rising, they're building shorts, and if the gold market is selling, they're buying, right? So right now we see that sort of coming back into balance a little bit. Despite that, though, I think that this very quickly on any run to the upside will go back to a short preference from the retail crowd, which has me potentially bullish. We're very close. We're on the cusp of being back in that territory. So I want to look at some factors here today. But before I do, I want to remind you guys, we are doing our 1-year anniversary sale for the EdgeFinder. So we have built this tool for the last 1 year. If I'm being transparent, I run a software company called A1 Trading, and we've spent a ton of time building this tool, which you guys see in my videos every day. If you want access to the Smart Money Tracker, our retail sentiment indicator, the bank signals tab, the high probability watch list, and signals for 30 plus assets and pairs, you can get it for a one-time fee using the link and promo code down below in the description. Or if you'd like to chat with someone from our team directly before you buy, if you'd like to check it out for yourself, if you have some questions that you want to do, down below in the description, we'll also include a direct live chat link where you can have a conversation with one of our support reps. So click this link, click chat now, click tell me about your discounts, and you can hear about our massive 40% off plus discount sale going on right now to celebrate 1 year of development of our software tool, the EdgeFinder. Get access now, use that link down below in the description to either get yourself access, or if you have questions and you want to hear about our discounts more or learn more about it, click that link, chat with one of my staff members here on duty here at A1 Trading. So there you go. And again, back to some more analysis here. So retail sentiment, feel free to pause again if you'd like to look at this for yourself. Some of the more extreme ones, pound USD, you've got 63% of retail traders on the short side. And again, this market looks healthy, right? Now, I'm not necessarily a super bull on the pound, as the pound has very, very high inflation. If we take a look at inflation numbers, it's a red flag in terms of the UK, floating at 10.4%. Of the big economies, this is a big leader in terms of inflation. In fact, if we isolate just the pound for a second, just to take a look at this, you can actually see that the UK is at 10.4% inflation, actually even ticked up in the most recent CPI reporting that we had a couple weeks back. So again, whereas you compare this, for example, if we add in the US here, I'm not necessarily, super convinced that I want to be long pound USD for this very reason. The pound, or the UK, still has inflation problems to the max. And here in the US, yes, we still also do as well, but we are seeing inflation decline at a reasonable pace here, or at least a rapid pace compared to the previous year where we were flying higher. And unfortunately for the UK, it seems to be still more of the same despite raising rates there. So I'm not necessarily super bullish on the pound, as again, inflation devalues a currency. It also oftentimes when you're seeing this rise, you'll expect to need higher rates to squash that, but we don't see necessarily them being super competitive in the UK compared to the US. Here is another look at interest rates. Interest rates, the UK at about, 4.25%? Is that right? Yep, 4.25%. In the US, we have 5%, which again, that larger interest rate hike may be a contributing factor to why we were seeing inflation on the decline here in the United States. Despite that, though, when I look at the pound USD, the chart looks really good, and it's partially. Why is the pound USD up then, Nick? Well, part of the reason is because we had such a massive devastation of the pound compared to the US dollar last year. We're seeing that trade sort of normalize or pull back now that the Federal Reserve is looking potentially more like it is going to start or stop rate hiking, right? So whereas the UK may continue to rate hike. That's kind of where we're seeing this trade rebalance. If you look at this from a longer term perspective, the weekly chart, we sold off big time when the rates were going up much faster in the US. Now rates are sort of slightly going up faster in the UK if they continue to rate hike. So yeah, something to pay attention to if you're looking at that. Same with the euro, by the way, and the euro, in fact, actually looks more attractive in my opinion. Here's the Euro USD. I think that I don't necessarily have a trade bias on this one either, but the chart looks pretty good. We've seen a nice little rally, and similar to the UK, inflation If we take a look at interest rates, the European region is behind in terms of that compared to the US and the UK. But despite that, we take a look at inflation numbers. We compare this with, we'll throw in another to the loop within our data here. We can add all three, and we can see the yellow line is Europe, which has seen, similar to the US, a decline in inflation numbers as of the most recent reporting. So in some ways, the euro could be the more attractive pick of the litter there as well. So that would be my take on looking at this. So if you really wanted a trade idea, perhaps the idea would be looking to get long euro pound. Let's see if that's on the watch list right now. Euro pound, no, it's not quite on the watch list. We do have euro NZD and euro yen. If you're looking to be a euro bull, my opinion would be something like euro Japanese yen. I've talked about this a little bit. Possibly a pullback could be of interest around that 145.50 level. And then also, again, euro GBP, I don't have a bias on it, but I would pick the euro over the pound at this time. So just something to think about. Also, I mentioned earlier that I'm looking at the indices. The indices for me, the NASDAQ looks really good. The S&P looks really good. On pullbacks, I am interested in these charts. So if I take a look at SPX 500, if we get that pullback, that will be a trade that I'm interested in myself. And then also the NAS 100, if we get a pullback here, that also could be of interest. Here is the 1 hour chart. We're pulling a Fibonacci retracement. That's 61.8%. Looks really interesting for a possible 13,000 retest buy. So that would be my opinion on charts that I'm watching here. Like I said, I'm long on gold. I'm also long on Bitcoin. I did a little trade this morning, kind of an interesting play. Of course, you guys can see all the trades being taken inside of our Discord channel. That is linked down below in the description. And you can also join our free Discord, which is also linked down below in the description if you want access to that. Thank you guys for tuning in to another video. See you next time. In this video, I know I went through a lot of fundamental analysis based concepts, so I put together a video just for you to help you out with this concept if you struggle with your fundamental analysis. Click here and check it out for yourself.